Hey there, welcome back to the podcast. Today we're diving into the financial performance of Firstsource Solutions based on their recent earnings report. It looks like they've been pretty busy.
Absolutely. Firstsource, established in 2001, is a global business process services provider, part of the RP Sanjeev Goenka Group since 2012. They have a global presence with over 34,000 employees. They offer services across various sectors like banking, financial services, healthcare, and communications, leveraging cutting-edge tech and data analytics.
Okay, so they're pretty diversified. What about the numbers? What's catching your eye in terms of financial performance?
Well, for Q3 FY25, their revenue was 21,024 million rupees, which is about $249 million USD, marking a 31.7% year-on-year growth. Their EBIT stood at 2,333 million rupees with a margin of 11.1%, and diluted EPS reached 2.27 rupees. They also declared an interim dividend of 4 rupees per share. The record date to be eligible for the dividend is February 21st, 2025.
Wow, that's a solid jump in revenue. What about their profit after tax? How did that fare?
Their profit after tax, or PAIT, came in at 1,603 million rupees, which is a 7.6% margin. And that includes a one-time gain of 88 million rupees. It's a 24.5% year-on-year increase. For the 9 months ended December 31st, 2024, the diluted EPS was 6.15 rupees.
So overall, it seems like they're on a good trajectory, especially with that revenue growth. Any specifics on what drove that growth?
Yeah, so digging a bit deeper, that growth seems to be fueled by some key deal wins. For example, they were selected by a top 10 healthcare payer in North America for claims processing, and they expanded their relationship with a major utilities company in the UK for customer support. They also landed a deal with a leading AI lending platform in the US for collection services.
It sounds like they're making strategic moves to diversify and strengthen their market position. Were there any one-off events that might have skewed the results?
Actually, there were a couple. The PAT for Q3 FY25 includes a one-time gain of 88 million rupees. It's always good to keep those things in mind when you're looking at the overall picture.
Makes sense. Now, what about the balance sheet? Anything worth noting there?
Well, their total equity stood at 42,332 million rupees as of December 31st, 2024. They've seen increases in both current and non-current assets like fixed assets and trade receivables. Long-term borrowings have increased, so that's something to keep an eye on.
Okay, so some increased debt. How's their cash flow looking? Is it enough to cover their operations and, these dividend payouts you mentioned?
For the 9 months ended December 31st, 2024, net cash generated from operating activities was 4,936 million rupees. However, they had significant cash outflows from investing activities, mainly due to the acquisition of a business. Remember that interim dividend declared, with the record date on February 21st.
Right, that acquisition. So it seems like they're investing in growth, which is a good sign. How do they break down in terms of different segments?
Good question. Looking at revenue by vertical for Q3 FY25, banking and financial services accounted for 32.4%, healthcare 34%, communications, media and technology 20.3%, and diverse industries 13.3%. Geographically, North America contributed 66.3% of revenue, while Europe, Middle East, and Africa accounted for 33.6%.
Okay, that's a pretty significant reliance on the North American market. What about the employee side of things? How's their headcount and attrition looking?
As of Q3 FY25, they have 34,144 employees with a net addition of 1,246 in the quarter. Their TTM employee attrition rate is at 31.4%. Also, women make up a substantial 46.3% of their workforce.
It's great to see such a large percentage of women in the workforce. Are there any key financial ratios that stand out?
Considering the dividend payout, dividend-related ratios will be essential for investors, especially with that February 21st record date. The earnings per share is also crucial, showing a positive trend. You'd want to compare these with historical data and industry benchmarks to get a clearer picture. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
Now, putting it all together, What are some of the key trends you're seeing?
The trend towards growth in revenue, margin expansion, and strategic acquisition stands out. They're clearly focused on expanding their capabilities, particularly in AI, and strengthening client relationships. Their business outlook for FY25 is also quite positive, with raised revenue growth expectations.
So, what's their outlook for the future? Are they expecting this growth to continue?
Yes, they've actually raised their constant currency revenue growth guidance for FY25 to 21.8 to 22.3%, up from the previous 19.5 to 20.5%. They also expect their EBIT margin to be in the 11 to 11.5% range.
Before we continue, if you are enjoying this podcast, please be sure to like and share this video and subscribe to our YouTube channel for more content.
Now, what's your overall take on Firstsource based on this report? Are they a healthy company with a bright future?
Well, overall, Firstsource seems to be in a strong financial position. The raised revenue guidance and strategic focus on AI and key industry verticals position them well for future growth. Of course, investors should keep an eye on factors like debt levels and global economic conditions.
Absolutely. What are the key takeaways for investors, especially those interested in dividends?
For investors, the key takeaways are the declared interim dividend with that February 21st record date, the solid revenue growth, and their focus on high growth areas like AI. It all points to a company that's both growing and returning value to its shareholders.
All right, so to wrap things up, Firstsource seems to be doing pretty well. Strong growth, strategic investments, and shareholder returns all make for a compelling story.
Exactly. Firstsource is navigating the BPS landscape effectively, leveraging technology, strategic partnerships, and client centricity to drive growth and shareholder value.
Well, thanks for breaking down that report. It has been insightful.
My pleasure. Always good to dive into the numbers and see what's really going on under the surface.